Hello, listeners. I am Rahul Agarwal, Senior Economist at ICRA Limited, and through this podcast, I will be sharing our views on the recovery in investment demand in the Indian economy. A majority of the investment related indicators witnessed an uptick in the year on year growth in April May 22 relative to Q4 FY22 on account of the low base related to COVID 2.0. However, the performance was mixed when compared to the pre COVID levels of 2019, with 5 of the 10 indicators witnessing an improvement in their performances during April May this year compared to Q4 FY22 relative to the pre COVID levels. The value of new project announcements eased to 3.7 trillion in Q1 FY23 from 5.8 trillion in Q4 FY22, while exceeding the levels seen in Q1 FY20 to 22. Although private sector project announcements dipped in Q1 FY23 relative to Q4 of last year, they were much higher than the average quarterly levels seen over the last 5 years, despite the heightened uncertainty caused by geopolitical tensions in the quarter. However, project announcements were concentrated in the power sector and were not broad based. Early data indicates that the value of completed projects declined for the second consecutive quarter in Q1 FY23 to a 4-quarter low of Rs 1 trillion. Project completions remained concentrated in the transport services segment, similar to the trend seen in the last 2 years. With a broader uptrend in the share of projects under implementation in outstanding projects for the transport services segment since FY 2016, project completions for this segment are likely to remain elevated in the near term. Capacity utilization levels rose to a 3-year high of 74.5% in Q4 FY22 from 72.4% in Q3. ICRA expects capacity utilization levels to witness a seasonal dip in Q1 FY23 before rising gradually to around 75% by Q3 FY23, exacerbated by uneven demand for goods amidst geopolitical headwinds. The recent moderation in commodity prices since mid June 2022 augurs well for corporate margins and is likely to boost business sentiments and support investment demand going ahead. We continue to expect capacity utilization levels to cross the 75% mark after Q3 FY23, which would then trigger a broad capacity expansion by the private sector. The year-on-year growth in stamp duty collection of 23 state governments, which we use as a proxy for property sales, surged to 116% in April-May 22 from 15.6% in Q4 FY22 on the back of the low base of COVID 2.0. However, such collections were a robust 42% higher in April-May vis-a-vis pre-COVID levels, indicating that housing demand remained buoyant. In terms of government capex, while the centre's capex surged by around 70% year-on-year during April-May 22, the aggregate capital outlay of 23 states declined by around 10% during the same period. The weakness in state governments' capex is likely to have been driven by concerns around the extent of reduction in the FY23 state-wise borrowing limits based on the adjustment of off-budget borrowings for FY23, as well as the end to the 5-year GST compensation period. We believe that government capex, particularly that by the states, would be crucial to support private capex recovery, which remains nascent at this juncture. Thank you for listening and stay tuned for our upcoming podcast.